Okay, this is going to be a video on trading options. Just a quick little tutorial. Now, the first thing I want to point out is the options I favor is on SPY, the ETF that tracks the S&P 500. And the reason I favor these options the best is because they have the most liquidity. So it's easy to go in and out in very short amounts of time. So on the left side, you're looking at calls, which are essentially bets that SPY is going to rise. On the right side, you're looking at puts, which are the other side, bets that SPY is going to fall. Now, the thing to understand is, what are you paying for exactly? Well, if you were to buy SPY 115 calls, you are paying for the right to own SPY at the time of expiration, in this case August 12th, this Friday, at a strike price of $115, which correlates to S&P 1150. Now, because there's 2.5 days until this contract expires, these contracts, the calls, are going to trade for a little bit of premium. What I mean by that is you're paying $1.63 for the right to own at 115. So really what you're paying is $116.63. Okay? Because you need to add the premium to the strike in order to get your break-even price. So if you bought it right here, right now, you would be paying $115 plus the $165 strike. So $116.50. That's if you hold it through the time that it expires. But the trading I like to do is by simply trading the premiums. What happens is, if SPY makes a big move, right now we can see it's just kind of bouncing in between a channel here. If SPY were to break out to the upside of this channel, what you would see happen is the premium right now that's going for 165 would start getting bid up much higher to 170, 180, because people will be willing to pay more premium for the right to own 115 if it looks like it's getting there sooner. Okay? Now, if SPY falls away from 115 and drops out of this channel, the premium is going to deteriorate, because who wants to pay a lot of premium for the right to own SPY at 115 when you could just go into the market, if it looks like you could just go into the market and buy it at 114 by the time Friday rolls around? So hopefully that makes sense. That's the first thing to understand. Now, the flip side of that trade, which is one I would actually put on right now as we're starting to put in a new low, would be the put side, which is the right to be short at a price of 115. Now, just like you add the premium to the strike on the call side, on the put side, you subtract the premium from the strike. So you would pay, say you want to buy a put here, the 115 put, the right to be short SPY this Friday at 115, you would pay $262. So that puts your break even at $112.38. Okay, because you're taking the strike price and you're subtracting the premium. Now, just like the calls will go up the closer it gets to 115, the puts will go up very dramatically the farther away it gets from 115. So what I like to do, I like to watch right here with these channels that I get here, and there's a clear trend going on, okay? Even if you take this one away, you can see SPY has really just been bouncing between 112.70 to 114.60, let's say. Now, I've gotten some higher lows, so I can now define that trend even more so because, in my opinion, if it were to break below 113.20, where this low is, then we'd be going even lower than this trend line. Just the simple case of higher lows, higher highs. Oh, and sorry, this is a 3-minute chart of simply today's action, okay? Now over here, I like to cross-check that. This is a 5-minute chart dating back to yesterday's trading. And you can see once again, SPY for much of today has been in this same range that we looked at over here. And on a 5-minute level, it's been confined to this range for the latter part of the morning. And so what I'm watching for is I want to see a breakout above this range, and that would be a buy signal to then buy calls, the right to own a bullish bet. It would be a bullish bet because I'm buying calls. Now the flip side of that is a breakdown below this channel. I would be expecting more downside. So what would I do to take advantage of that? I would buy the puts. And once again, just like I showed on the 3-minute chart, I've moved the lower range of this channel up to here because to me, it should not go back below here. And if it does, it will be going lower. So now we have what we're watching for. We're waiting on a buy signal, and we know that we're either going to buy a call or a put. We know that we're going to buy the 115 on the call side and the 115 on the put side. You can choose any ones you want, but you'll notice here there's some pretty good volume trading on these ones, which is why I like them. There's a lot of liquidity. There's nice tight spreads as opposed to these ones. There's a bit of a 3-cent spread, you know. So you want nice tight spreads so you can cut a loss fairly easily. And you can see what's happening with these calls we were just looking at 163. They've started to go up as SPY has attempted to test the top of this range once again. So I'm just monitoring, watching the volume. I want to see higher volume to the upside. I like this price action right here. We're putting in 1 low, 2 lows, 3 lows that are all higher than the last one. Even going back all the way to yesterday, we have higher lows, which is the name of the game. So my bias right now would be that we are going to break out to the upside here, and the markets are going to make a nice move. But it's important not to get ahead of yourself and actually wait for the breakout before buying. Because just like up here, it looked like there was going to be a breakout. Look what happened, right back down. Just like up here, it looked like there was going to be a breakout. Look what happened, right back down. So you really want to wait until it truly gets above your range, and then you will put the trade on. That's very important. You need to stay disciplined. Otherwise, all you're doing is hoping and praying and guessing, and we don't do that. So let's watch the activity. I want to see it hang up around here, 114.50. I don't want to see it drop back into the 114.30 range. As it's looking like it might be doing, but you know, it's doing a nice churn here, still holding in the top of our range. Now we had a little break there. Look at that volume increase. Look how quickly that increased right there. We're getting a nice little break here. It's trying. That 114.50 break should be really good for a nice pop up towards 115. Now remember those calls that were at 163? Let's see what they're up to. Look at that. 178 by 180. We've just gotten a 17-cent move on those calls. We got a 10% move in a matter of minutes, okay? And we haven't even seen the breakout yet. So you can see how these calls can be very profitable. And likewise, on the other end, look at the puts. Big drop. We were looking at them around 250, I believe. Now they're down to 232. So it's important to really wait for your signals. Look, here we go. There's the breakout. Good volume. Look at the volume. So we would have entered that trade. We'd be in the trade now. We've got a nice breakout to a new range going on up here too. I'm going to move this on up. Here's the top of my next range. Really getting a great move here. Volume is good. Look at that spike. Really good volume. Look at that. Look at these calls. They just exploded to $2. That is unreal. We just literally got a 37-cent move from the time this video started to now. So they trade just like a stock. You know, I'm just going to trade the premium. I would have bought on the breakout around 175 when we were looking at it. If you wanted to be aggressive, you could have bought the 163s. And then I'm simply just going to sell. You know, I get the profits. It made a move up to $2. That's easy profits right there. And now we've established a new channel. The trend is turning around here. So we're going to keep monitoring the action. And look at the volume. The volume is confirming this breakout above that channel. Highest volume since 1235. So this is constructive. This is bullish price action. And that was a quick video on the type of options trading I like to do. I hope you all found it helpful.